If you look at the publicly traded companies, most but not all missed their earnings. Now, that doesn't mean they lost money necessarily, but if you're publicly traded, all you have to do is miss your earnings estimate and you will get punished for that. Some lost membership. Some didn't, but some did. And most reported that they missed those earnings due to medical trend. So they're going to start pricing accordingly, and that's the advice that they're giving analysts. At the same time that's happening, a number of the not-for-profit or non-investor-owned Blue Cross Blue Shield plans are being told to burn down their reserves. Anybody here remember the underwriting cycle? The underwriting cycle, nobody's been able to say exactly why it happens, but I think we're pretty sure why it happens, and it was something along these lines. The Blues would build up these big reserves, they'd be told to burn them down, and they would do that through rate subsidy, at which the commercials would have to chase it, and then down you go, and then it takes you a couple of years to cut course and get back, back up above and get a positive line. And in fact, some of these Blues that are indeed burning down reserves are showing negative operating margins, but their reserves are big enough that even in this economy, they're earning enough investment income to cover a lot of that. But it sure places a lot of premium cost compression on the marketplace. Now, we're not the Wild West that we were back in the, that's alliterative, back in the mid-90s when there were a gajillion plans chasing each other around looking for market share. A lot more discipline around pricing, but it sure is going to squeeze it. And, oh yes, inflation seems to be picking up too. Maybe not the inflation defined by the broad market basket of all these things thrown into it, but in the eyes of consumers, and we're going to come back to the issue of consumers multiple times today. In the eyes of consumers, if you look at the things that consumers have to spend money on, i.e. you, gas, energy in general, energy of all forms such as electricity and natural gas for heating your homes, food, transportation, and Maslow's hierarchy of needs, most of the stuff that you really, really need is getting more expensive, with the exception of housing, which has gone down. But then you've got debt service to pay on that. And for consumers, even though their employers pay the same percentage that they always have. So the employers are not bailing out yet in big numbers because they're paying the same percentage, but because of inflation, of course, the premium contribution that the worker makes goes up, and they pay more out of pocket because the benefits go down. So